You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by Cboe. Cboe is one of the world's largest exchange holding companies, and we're inspired every day to innovate some of the industry's most powerful products, technology, and solutions. We're the industry's leading force driving access to global markets, a better trading experience, and powerful data and analytics to inform better strategies. We're committed to engineering new ways to help our customers realize their potential and navigate the marketplace of tomorrow, today. Visit Cboe.com. That's CBOE.com to learn more about our expanded offerings. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it's time once again to view some volatility here on Volatility Views. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the old network, the place where you can find this program and many other fine options-oriented programs. No matter what your interest, chances are we've got a show aimed just for you. And if not, hit us up. Maybe that's something we're cooking up in the near future. Maybe you have a crazy idea we haven't thought of. Go figure, it's happened before. So hit us up if you have an idea for a show that you think we should add to the ever-growing network. And of course, you guys know how to get us by now. iTunes, TuneIn, Stitcher, the website, all that fun stuff. Also, our mobile app. If you're some of the hardcore who need to have it before the podcast is ready, head on over to the Mixlr, MIXLR. We do it live every Friday at noon Central, 1 p.m. Eastern. Grab that link. That gets you everything. It gets you this. It gets you Option Block. That gets you some of the live interviews. We had Tony Sliba in the studio a couple days ago here. We did that live. So lots of fun surprises come to that Mixlr feed all the time, too. So if you've got it or you follow us in Mixlr, you get access to all that cool stuff. And of course, however you listen live after the fact, hit us up. Questions, comments, insights. I'm guessing a few of you may have a few questions about what's going on in the world of volatility these days. I know I do, so you guys probably do as well. So get them in here. We'll talk about them on the old show today. All right, and joining me on the old program today, we've got a rotating cavalcade of guests, starting off with the man who likes to name his funds after lines of demarcation on the earth and in the atmosphere. He is a greasy meatball, Mr. Mark Sebastian from OptionPit.com by way of Carmen Line Capital. Mr. Meatball, welcome back to the show. I hear you're a little under the weather, so I'm glad you could soldier through and join us today, sir.
Yeah, no, I would never. Just because my stomach is experiencing volatility doesn't mean I can't contribute to Volatility Views.
You're just having sympathy pains with the market today. That's what it is. You know, the market's moving, market's feeling a little vol, so you get a little bit of vol. That's all. Just sympathy pains.
That's exactly right.
You're that in tune with the market that you feel its pain, sir. There you go. Maybe that's a good thing. I don't know. I think you want your fund manager to feel a little bit of the market's pain sometime. Good thing. Keeps him on his toes. All right, and also joining us, old friend of this program, even though he hasn't been on in quite some time, he is Ewan Sinclair from Talton Capital Management. Ewan, welcome back to Volatility Views. It has been far too long.
Yeah, thanks for inviting me back. And it's been an interesting couple of months. So I feel like things have changed a little from, I don't have to say the standard, vol's going to stay low for the next 2 years kind of thing.
No, it's nice, isn't it? It's refreshing to be able to change it up a little bit. Speaking of changing things up a little bit, it's been a while since you've been on the show. You've done a few things since the last time you joined us. You of course we were here when you were still up, managing risk. I believe it was at Bluefin. You of course had Factor Wave. Walk us through what you've been up to, and I think it's been about 2 years since you've been on the program. I know you've been doing a lot of interesting things since then.
Well, Factor Wave was a fintech company that was based on stock analysis using factors like momentum and size and value and so forth. And we then pivoted. We sold that analysis to one particular RIA and then pivoted to become a crypto trading company, which was a fairly dramatic pivot, I would say. But we kind of got sick of the customer acquisition battle. So we went back to what we understood in the first place. And for the last year and a half, personally, I've been involved with starting a fund, Thompson Capital Management, and trade index.
Oh, yeah, I think you broke up a little bit at the end there. I think you were saying you're starting a hedge fund now. Just repeat that for our listeners, please.
Oh, yeah, sorry. We're starting a hedge fund. Well, we have it for the last 2 years. Thompson Capital Management, which is a volatility trading fund. We trade index options and the VIX concept.
So you got me a little nervous there for a second there, Ewan, and you said you pivoted into crypto. I was like, uh-oh, even Ewan's been lured to the dark side and away from the volatility realm. But it sounds like you're still playing in the volatility realm, but maybe dipping a few toes into crypto. Is that accurate?
Well, the crypto thing's a separate entity. I want to be very clear. I don't believe in crypto for a second. I think it's all garbage. It's not currency. You can't handle anything. On the other hand, I'm an old school trader. I'll trade anything if it goes up and down. And crypto certainly goes up and down.
It does that indeed.
Yeah, it does.
It does that indeed.
So I'm glad to hear that you're still have a little bit of healthy skepticism for the crypto space, because I was surprised to hear when I ran into you the other day, very recently actually, that you were pivoting into crypto. So I thought it was worth discussing. So we'll get to all that fun stuff, but there's a lot of vol popping off in the world these days. So let's get to that as we get on into our volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody. Welcome to the Vol Review, the portion of the show that's pretty self-explanatory. We review some volatility, and boy, has there been some again this week. Justin, you thought we were maybe settling back into a nice little range in the volatility landscape or maybe in the broad market. Nope. Trade wars rearing their ugly head again. Some scary stuff on the tech side in terms of data handling, crushing all the tech stocks. You got Trump doing his 1-2 punch of trade war threats. All that combining, we had the Fed coming together, doing some actions this week. All sorts of fun stuff. All that maybe adding to the heady stew that gave the market a little bit of a nosedive this week, particularly yesterday. Big soft again yesterday. We seemed like we might be coming off the worst of it a little bit. People were concerned yesterday, of course, when we closed at or near the lows and a lot of the major products out there. Then, of course, this morning it seemed like we were maybe going to rally off that a bit. And then as we're kicking off the show here today, not so much. Most of the major indices back in the red. S&P off about 0.5%. Tech-heavy NASDAQ off a full percentage point at this point. Dow, the laggard, after leading charge in yesterday's sell-off. How many headlines did you see? Dow off 700 points, just because it's a large number and it sounds cool when you talk about it. But only off about 0.3% today. And all that red means we had, again, VIX cash, one of the few, actually a little bit more green on the screen yesterday. We were kind of lamenting on the option block yesterday that the only real greens to be found were VIX and Groupon, which is a scary proposition when those are the only two bits of green on the old screen. VIX cash well into the 20s, 24.07 as we're kicking off the show here, up about 3/4 of a handle, which means my prognostication for this week, which was one of the highest, probably the highest one of last week, but still about 9 handles too low, means it's probably not going to happen unless we have the most precipitous decline in the history of this show when it comes to VIX, dropping a full 9 handles in the cash over the course of an hour. It could happen. I'm not going to go out on a limb and guess that is going to happen. But a lot has been going off. Ewan, you're our guest. You get pride of place. There's a lot to sink your teeth into here from a volatility perspective. What's been catching your eye out there these days?
Well, okay, just to back up a little bit. When things are quiet in the market, it's always because of the same reason. And the reason is nothing's happening. But when the markets are volatile, it's always because something's happening. And the something's always different, which makes it hard to analyze any given situation. This week's been odd because we're not moving around because of any one thing. We've had volatile earnings. We've got a volatile president. We've got the possibility of an actual trade war. We've got John Bolton coming back, so there might be another war. And we've got the Fed, although the Fed was very open about what they were going to do, so I don't really think I can blame much of this volatility on them. But Trump is, he's literally volatile. He's basically driven by whoever he spoke to last, which makes it very difficult to sort of guess what he's going to do on any given day.
Yeah, I like that. Volatile earnings, volatile presidents. We could certainly, you could certainly make all those commentaries. Got good old John Bolton. Gotta love a man who's not afraid to dye his hair, but not his beard. That's or a mustache. That's an interesting fashion choice. That notwithstanding, but you're right. This has to be interesting time. You mentioned you're kind of starting up a new volatility fund these days. I know a few other people who might be doing a similar thing here. Some even on the old program. What's that been like for you? I mean, launching it and trying to ramp it up in the teeth of, the last month or so, which has been the most volatile period in several years from a market standpoint.
Well, we've done really well. We were long for a chunk of the early February volatility. The problem we're having now is that the whole space has been somewhat poisoned. A lot of volatility funds don't really do much other than just sell options. And there have been a few that absolutely got destroyed doing that. And I think even the ones who didn't get destroyed lost 10 to 30%. Last year, we had to justify the fact we were holding a hedge. I mean, we're always hedged, and we're sometimes out of the market because we're long or flat. And it's gone to this year where the whole space has now got a fairly bad reputation because of their short selling, the firms that only sell short. So now we're having to justify volatility as an asset class all over again, even though we've done well.
That's interesting, because we have seen a lot of that, and we have talked about that on the show before. A lot of the funds, that blew out recently, even though it wasn't like this was an unforeseen or unforeseeable event that vol would come back. Maybe not quite this much this fast, but still, everyone knew eventually it was going to come roaring back, and to be caught on the back foot like that. And you're right, I've heard lots of great anecdotal stories of some funds that blew out, having, just crazy levered ratios, 1/8 on the call side, 1/10 on the put side, and just kind of ridiculous nonsense that any level-headed risk manager would look at and say, okay, no, this is not how we're going to proceed. But, it worked for a while, and that's the kind of trade that works until it doesn't, and then when it doesn't, man, it blows up hard. Especially in the case of like some of those levered ratios where you're getting hit on the upside and then back on the downside again. You kind of just losing everywhere, which is, spoiler alert, why I heard some of those funds you may have alluded to could maybe possibly have gone the way of the dodo. But you're saying that's kind of poisoned the well for any new vol fund now. Everyone's kind of lumping you in with those same kind of, shall we say, toxic assets?
Yeah, and we do not just sell vol. But a lot of these funds do, and frankly, if that's all they do, they're not worth a 2 and 20 fee structure anyway, because that's a very easy strategy to replicate. So we're trying to add genuine alpha by, trading volatility instead of just selling it.
And do you guys have a product du jour? Are you mostly in the options? Are you in the futures? Are you in some of the ETPs? Are you doing S&P options? Or do you do a mix of all of the above? What's your, without giving away the secret sauce, obviously, what are your weapons of choice?
Any developed market index and the VIX space. About 50-50 between those two.
Interesting. And Mark, you're obviously in a similar boat right now, launching a new volatility fund. Do you seeing the same thing Ewan's seeing out there, that a lot of these funds out there have maybe poisoned the waters from a vol fund space and making it a little bit more challenging to raise capital when all of these quote unquote vol funds and supposedly savvy individuals are blown out left and right after getting a little hog wild on the short vol trade?
Yeah, I mean, that's certainly been a problem. I think that, you have a recency bias out of a lot of traders where they just assume vol is going to go right back to 9 and don't realize that, hey, the VIX can stay in the 20s and 30s for months. Backwardation can happen for a while. And, yeah, you got a lot of people. I mean, last year you have people saying, your returns are way under XIV. Why am I trading with you when I could just be with like an XIV or something like that? And meanwhile, yeah, we're making the same case. Well, we're trying to hedge ourselves so we don't blow up. Then, XIV blows up and it doesn't do you any good anyway. Right? It just, no, I don't want to. The people that were interested in that space, a very small segment didn't, when it was easy to make money, didn't think they were smarter than you. So the big money that had money thought they were smart enough to do themselves. So what do? They go out and do buy XIV. And then, now that they've blown up, the people that should have been a natural investor for our space have been kneecapped. So it's a very challenging proposition raising for a straight vol fund right now. I don't know if you've had the same issue, but that you definitely run into that.
Yeah, and to add to that, last year hedging was actually very expensive because the relative value of teeny puts, even though the VIX was low, you ended up paying a huge amount relatively for those hedging options.
Yep.
So, people were saying, oh, you guys underperformed. And like you said, it's a recency bias. We massively overperformed the year before, but people didn't seem as interested in that. Mm-hmm. It's like you say, everyone thought they were a genius last year for buying XIV. And, yeah, so we
don't
back
feel
to
like
these
they're a
people
genius
now
anymore, do they?
No, but they're not prepared to make the next step, which that people like us are geniuses. That's the problem.
I was going to say before, Mark, I hope you called back each one of those people who said, I'd rather be an XIV and just kind of did a na I told you so. If they're still around.
I did not. That's not cool.
It would be
Some
fun.
of them can't afford phones anymore.
Yeah, that's true.
Yeah,
if they're still around.
I mean, that was just a disaster for the business. And, it certainly could have been, the PR around it was not handled as well as it could have been. And, then SVXY coming, or the ProShares people coming in and saying, yeah, we're going to stay in business, then re-kneecapping everybody again was not the nicest thing either.
Yeah, that didn't help. That's kind of just rubbing a lot of salt in the wound. I think we actually have some more listener questions. People won't get off the SVXY tip. Like I was saying to you the other day, and people are really up in arms about the SVXY thing. But we'll save that for some of the listener mail. That said, like we said, things are popping off right now. VVIX over 100, over 120, right around 122. VIX cash back in the heavy 20s. VIX futures, shall we say, super backward. Just crazy backward. Like I said, VIX cash around 20. The VIX futures, last time I pulled it up here, was front month was a little bit shy of 20, about 19.75, about a point lower for the May contract. So some nice backwardation cooking off out there in the futures. That said, Mr. Meatball, aside from the challenges of raising capital in this environment and resisting the urge to point fingers at people who bought XIV, aside from all that, what else caught your eye in this week's crazy maelstrom of volatility?
Yeah, I mean, I would say that the dollar really, if you look, this all kind of started Wednesday afternoon after the Fed, after we're already up, and everybody just kind of assumes things are going to be nice for the day. And then the dollar starts tanking. And then the price action of the dollar starts to affect the cash-heavy multinationals. So Apple starts to get obliterated by the market, and Apple took everything lower. Apple absolutely got dominated Wednesday, and then that kind of continued Thursday morning with all the discussion of tariffs, and then after the president spoke, he didn't really help the situation that month, that much. And I think a lot of people, I had said that maybe we were in a new regime of sell the rumor and buy the news. That's certainly the way it's looking today. But what ended up being was sell the rumor, buy the news, and then sell again. Because that was the price action we saw yesterday. So I'm really kind of fascinated by kind of the market as a whole. The tech space, Facebook, is a disaster. It's a PR disaster, and it drags everything down. So you got a sinking dollar. You got a sinking dollar, and you've got the tech sector that was holding everything up getting obliterated. And, then the other piece, the final piece, the part that I think is hilarious is, oh no, interest rates might go higher. What should we do? I know, let's buy bonds, which is what happened with the 10-year note and the 30-year. I sometimes I do not understand what is going on in trader psychology.
Speaking of psychology, I was looking here now, and we got I know a lot of our listeners like that 300 strike in Tesla, and it seems like it was testing it today, hit 300 in about a half and bounced off. So I know a lot of our listeners out there who, shall we say, enjoy a nice short premium binge every now and then out there in Tesla, probably sweating a little bit today. So our thoughts are with you out there, listeners. Hopefully you've been rolling and risk adjusting on the way down, though I'm going to guess probably a lot of you, maybe not so much. Let's move on to what was catching our eye out here in the big VIX mothership options. As you might imagine, pretty busy week for all things VIX these days, though yesterday maybe not quite as active as you would have thought, given the depth of the movement we saw there in VIX land. Not quite the blow up day. VIX is averaging these days around still north of a million contracts ADV, about 1.04 million to be precise. So far today, a little bit under 300,000 on the tape. So a little quiet day out there today as well, even though we saw a bit of reversal in the markets earlier today, which you think might have driven some volume. Getting a little bit of reversal again today. The Dow flickering with going back to the green as we're doing the show here. So who knows what will happen as the day and the show progresses. Yesterday, shy of 500,000 actually, about 497,000, which I think would surprise a lot of people. Wednesday, 451. Tuesday, threatening 1,979,000. Monday, the big day, about 1.3 million out there. That call to put also edging higher. We talked last episode about how it had gotten into some historically fairly low range, right around shy of 2 to 1, about 1.9 to 1, which is a level I know I certainly haven't seen for quite some time. And I know all you folks out there who watch that a lot more than I do in terms of the VIX call to put ratio. But we're noting that as well out there. VIX usually hovering out there, at least around 3 to 1 call to puts, if not more. So when it gets shy of 2, that's worth noting. These days, back up to about 2.4 to 1, a little bit more reasonable than it has been in recent weeks. In terms of what was lighting it up out there, what are the big go-to positions, the big meaty strikes out there, the hot strikes in VIX land right now? Number one with the bullet, things again have come off a little bit out here in VIX land. Not surprisingly, we saw some options coming off the board there. So the big number one strike, probably about half the size of what it was just last show, right around 250,000 of the 822s taking the number one spot this week. You remember recent shows, we saw numbers 450, 500, 600,000 on some of these number one spots. So that's far smaller. 250,000 probably would have been around number 8 to 10 on recent episodes. But that just shows how the OI is adjusting out here right now. Number two, the 825s with about 250,000 there as well, about 2,000 contracts separating number one, number two. Number three, the 820s, 202,000 contracts. Number four, 837 halves. That's a strike. That's an interesting strike, shall we say? Just shy of 200,000 open on that strike. So interesting. I need to dig in a little more about what was afoot there on those 837 halves. Number five, the 817s, far more reasonable 817s, 172,000 contracts. Number six, the first put on our list, 171,000 of the April 15 put. Everyone loves those 15 strikes out there in VIX land. Number seven, the 830s with 154,000. Number eight, the second put on our list, the 813 puts, 148,000. Number nine, June, the first and only only June on our list. The June 20s, 117,000. Round out the top 10. The third and final put on our list, the April 12 puts, 105,000 contracts. Mark, last week we talked about, Andrew and I talked about a funky, I think it was a funky, funky iron fly out there in VIX with a crazy call kicker out there on a crazy strike. I think it was the 40 strikeout. It was a crazy trade. So there was some weird stuff lighting it up out there this week. Anything catching your eye this week in between, of course, your own personal volatility?
Yeah, there was a lot of April call. It was interesting. Monday and Tuesday, we saw a lot of people step in and buying April calls, April upside in the 20 to 30 range. We're not seeing as much crazy aspirational call buying. More people looking at, trading VIX go to 25 or 30 and then and around it. And then when we get these spikes, you actually see people, it looks like they're almost legging into strangles. We see big put buys. Again, you said the April 15 puts were bought. I saw a big order kind of as we were in the middle of tanking yesterday for the 16 puts. I want to say it was like 16,000 of them. So we're continuing to see people trading. If I was to analyze flow, it's people are bracing for a pop and planning for a drop. That's kind of the way the flow has been among volatility. I'd also like to talk a little bit about the speed with which skew has been flailing up and down. We have seen downside puts just get insanely bid very quickly, and it's been shocking the way the skew curve will explode and contract on really every little move in the S&P. It's pretty fascinating.
I was noticing that myself yesterday. I was looking at some downside puts in S&P and even a little bit of some VIX land puts. Just to keep an eye on things out there, and it was surprising to me just how shall we say rich some of that had gotten. How quickly it happens out there too. It's always fascinating to watch the tail of the skew start wagging a little bit. That said, Ewan, you guys are out there slinging a bunch of different vol products out there. Could be VIX options, could be something else entirely. Anything out there though in VIX land really catching your eye, maybe from a flow perspective, or a weird trade that caught your eye, or just maybe some of the general performance out there in VIX land that's really been on your radar as you're launching this new vol fund?
No, I don't really watch flow at these sort of time scales. I've never really found it helped me, knowing, sort of backing out what other people are thinking. I will say, though, that when you have a move, a week that volatility has been so high, it can be easy to get confused about these things if you don't very carefully track whether it's an opening trade or a closing trade. Because there are just going to be a lot of people. Maybe they had the same opinion they had 2 weeks ago.
No, you're right, and that is part of the challenge of doing any sort of flow analysis on any product. VIX makes it doubly hard because there's so much flow that sometimes it's hard to spot the forest for the legion of trees floating around out there, finding maybe that proverbial needle in the haystack when there's 100,000 contracts plus going up on every strike, and trying to find, what this 15 to 20 or 30,000 a lot really means. That could be a little bit more challenging than when you have a name that does 200 contracts a day and all of a sudden does 30,000. That's a lot easier to intuit what the heck's going on out there. And also when the open interest is open and closed, VIX makes that a little bit more challenging, which also makes it a little bit more fun, which is why we like to talk about it here, excuse me, on the old program. But you're right, sometimes it can be confusing as well. So you have to be prepared when you're doing this kind of analysis for a little bit of confusion. I think that goes without saying when you're going in. Speaking of products that can be confusing, I know a lot of you have just been kind of just befuddled by all things VXX out there these days, and the legion of products that trade in and around it. VXX getting lofty again, threatening, didn't quite get to 50, got out to 48 and a quarter though in today's trading. Let's see how high it got yesterday. No, it didn't hit 50 yesterday either. About 48 yesterday, a little bit shy of that as well. So threatening the 50 handle, but not quite there. So all of you who maybe were worried that you missed the the big erosion play. A lot of you have been writing in saying that. There's your fourth or fifth chance at it now. It's been resetting a lot. Maybe that's a spoiler. Maybe there's other things happening out here these days. But there you go, back up in the 47 range. In terms of what's lighting it up out there, Mark, I'll spare you the ignominy of making you guess again this week what the number one with the bullet options position is out here in VXX. It's the same as it has been for quite some time. These Jan 2019 10 puts, there is a ton of these things open, and they continue to be the number one. About 166,000 of these 10 puts open out there. That's been that number for some time now here. And number two has been the Jan 2019 15 puts, and number three has been the Jan 2019 5 puts. And it's been that ratio of about 75,000 and 70,000 to 160-odd thousand. Pretty much unchanged for the better part of the last few months, at least, out here. So interesting to see. Number four, the June 20 puts. Number five, the May 28 puts. You got to go all the way down to number six to find the first size call position, and it's the 845s. So interesting. Now the in the money 845s. So you got to do some digging. And the only long-term call out here, really, there's a Jan 2019 50s coming in at number 8 with 39,000 contracts open there. So interesting stuff. Not a lot of call love out here in VXX land, which is not a spoiler. About 3.5 million contracts open out there. So that's less than half than, what we're seeing open out there in VIX, which is about a little over 7. So shows you just the even though VXX, a very active product, shows you how much options volume is going up out there in VIX land. And of course, everyone's former favorite, now least favorite, most litigious product out there, good old SVXY. This one also an interesting one. You guys continue to light us up on this one. It's up to around 1177 right now after having threatened 13 so recently out there in SVXY land, and then not so much. It's even impossible to chart this thing. Looking at a 3-month chart of SVXY, the ratios are the format is so skewed off the recent price levels that it's almost impossible to use. Excuse me. About Jan 25 puts still open out there, about 42,000 of these. That's been number one position for a long time as well, which kind of makes me wonder if that wasn't maybe some well-timed paper that got frozen, because otherwise, why wouldn't someone have closed that out by now? They certainly missed the boat if they were intending that as any sort of hedge or spec. They had a great trade. It's still good, don't get me wrong, but it's not perhaps what it was, and yet it continues to be open, which is surprising and or befuddling. Number two, the Jan 25s. Number three, the Jan 22 halves. Number four, the Jan 5s. 15,000 of those bad boys open, which is interesting. And number five, round out the top five, the June 30 calls out there in SVXY. You said you look at a lot of volatility-oriented products. I know a lot of the retail tends to play in these sorts of ETPs, VXX, and our old favorite SVXY. I know you have some thoughts on SVXY, but maybe we'll table those for now. But anything catching your eye out there in the broad ETP space that's maybe informing your trading over there in the Vol Fund?
Yeah, one thing I want to bring up with VXX is that it's always tracking this 30-day fictional future. So when you get to situations like this, where you've got very steep premium to the cash, you'll often find VXX is significantly less volatile than you might think it is, because that 30-day future is going to be quite sticky. Because if the cash drops from 23 down to 17, we might actually see that future hardly move at all. So I think as the term structure is changing a lot, it doesn't just dampen the level of VXX or make it sticky. It also significantly dampens its volatility. So people have to take that into account as well. And I don't think usually they do.
No, they're buying it for their IRA, right, and setting it and forgetting it, which is quite possibly the worst use case on the planet for this product. But that is an argument we've had many times before on the show. We won't belabor it here at this point. Mark, anything catching your eye out there in the topsy-turvy world of all things VIX-related ETPs, sir?
Yeah, nothing really crazy going up. we did see a customer come in and trade some downside early in the week, but that's been it. There's not most of the action has been in VIX relative to VXX here. It's just not catching as much volume as you might expect.
Indeed. You know what is catching a lot of volume, though, at least from a vol perspective these days? The commodity vol ticking up a little bit. A lot of people have been writing in, especially to our TWIFO program, which is, spoiler alert, coming up in about an hour after this show. We'll be diving into all things commodity vol, so stay tuned for that if you're on the live feed, or if you're on the podcast, make sure you check out that podcast there as well. But a little bit of a lift out there in commodity vol land with OIV, which is, of course, the VIX of WTI, up a little more than 2 points today, right around 25 and a half or so. And gold vol ticking up about a handle out there as well, which, as you know, if you've been watching and listening to that show, that commodity vol has kind of been, shall we say, low for quite some time. And people have also been writing in for quite some time saying, when are we going to get a little boost? Maybe this little boost maybe this one will last, or it'll be like every other near-term vol pop we've seen out there in the metals and in the energies, which is it lasts about a week and then it goes away because the movement is not sustainable. We shall see. Maybe we'll get into more of that on TWIFO. But right now it's time to get into a little bit of your mail. It's time to open up the volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody. That music means it's time for you guys to join us here on the program. Questions, comments, insights, pearls of wisdom, slams of the greasy meatball, all sorts of fun stuff. We welcome it all here on the old volatility voicemail. By the way, if you guys haven't been playing along, I know a lot of you have, make sure you get in there and play along with our broker madness battle. It is popping off right now. We're in the middle of round 2 right now, so we've gone from 16 firms fighting it out for your favor and your approval. Half of them are now been wiped out, so we're down to 8. So we got the Elite 8 fighting it out. Right now, got some fun battles going on. We got Toss versus, shall we say, sibling platform Tastyworks. I think we've also got Lightspeed going up against, I'll have to look and see. It might be TradeStation. I'll have to go check and see who they are battling it out against. Either way, head on over. You can vote a bunch of different places. You can vote on Twitter is where the main poll is, but StockTwits. You can vote on Facebook. In fact, I encourage you to vote on all those places. Email, carrier, pigeon, however you want to get it done. In the live chat, you can do it there too. It all counts, and the more times you vote, also the more times you retweet, like, do all that stuff. That means the more times you get entered, to win fabulous prizes like Options Insider gear, Amazon speakers, Amazon gift cards, all sorts of fun stuff. So retweet, like, share, vote, all that stuff. The more you do it, hey, it's Chicago style, vote early, vote often. Someone wrote in and asked a Contango trader, writes into the show all the time, says, can dead people vote also? How about Russians? Can they vote also? Yes to all of the above. It is Chicago style, vote early, vote often. Bring your dead relatives, bring anybody you can. They can all vote. It's a fun party. And at the end of the day, only one firm shall stand victorious. So you guys can help determine who that is. There's a little bit of bragging rights out there in the space. I know a lot more brokers pay attention to it than they are willing to admit, just from what I've heard anecdotally out there. So if you want to send a message to your broker, you love them or maybe you hate them, this is a good way to do it. Get out there and vote early, vote often. All right, BTBurg wants to know, everyone's got similar questions these days. What is the best way to trade these inverse VIX ETFs going forward? He might have sent this in a little while ago because he's talking about being long XIV. I don't think he is anymore. If I'm long XIV, does it make sense to always have some VIX calls in my back pocket just in case? Doesn't that get expensive really quick? What about SPY puts? Or should I just have puts on the inverse ETFs in case the counterparties get cold feet? Well, that would have been a good play, the latter, obviously. We've seen quite starkly the risk around counterparties, and shall we call it maybe issuer risk or a counterparty risk out there in the land is quite pronounced in these products. So maybe the latter would have been the best way to go. Obviously, Mark is kind of a theoretical now because XIV doesn't really exist, but In the future, there probably will be some sort of inverse vol product out there again. When you guys were trading these, I know you guys did at Carmen Line, or you have people at Option Pit. What was your preferred way to do it? Would you have some VXX? Would you have some VIX? Would you have something else? You had to have something else against it. What was your preferred method?
I mean, generally speaking, I think it's safer to use puts in VXX or and you get some things to your favor. One thing we always told people with XIV is the curve starts to flatten, stop holding it. It literally tells you when it's in danger. And, you have the same thing with SVXY. I think that would be the main piece that I think people failed to take into account is that, XIV was primarily a term structure trade. And that was the theory behind how great it was, right? Or that was why it was so great. And then when that term structure flips, one, it's not even that great of a hold, and two, you're now at risk. And that is kind of what happened. And that would be, if you're going to hold these products, you need to be aware of how term structure works, and you need to trade it.
Ewan, obviously, like I said, this is a little bit of a theoretical question these days because one product doesn't exist anymore and the other is a pale shadow of its former self. But that said, if you guys, you said you at least watched these over there in your fund, if you maybe traded these as well, if you were trading, the inverse vol products, did you have a particular methodology you'd like to use? Like he outlines a few choices here. Did you like any of those routes? Did you have a different route, or did you guys maybe not touch them at all over there?
You've got a hedge, and if you think the hedge is too expensive, then you don't have enough edge in the original trade because you have to hedge. Also, if you're doing an ETP or an ETN of any kind, not just volatility, don't be tempted to hedge in a different product. So if you're trading a volatility ETN, don't look, say, I can hedge it better with VIX or I can hedge it better with the spiders. Because what we've seen is that you've got massive issuer risk as well. So if you had, XIV and you'd hedged it with VIX, it wouldn't have done you any good at all. Because, the VIX itself moved, but XIV got completely destroyed. So you have to hedge with the actual product you're trading.
That's true. The ratios of XIV movement to VIX movement, not exactly in sync. You're right. So, perhaps I've always been a fan of the direct hedge, either the put or some other way of doing it in the underlying. And in this case, in the actual product you're trading, and in this case, that certainly was the preferred methodology there. So there you go. Whenever these products start to reemerge, and they probably eventually will, maybe not so much right now, not exactly a favorable regulatory environment for launching a new inverse vol product, but someday they probably will reemerge, and when they do, worth considering. All right. Apparently, our buddy Ophir is freaking out about what's going on out there. He just wrote in saying he just wrote VIX term structure and a bunch of scared-looking eyeballs. So apparently he's freaking out about the VIX term structure. That little bit of backwardation maybe is spooking him out there as well. Interesting there. Thank you for sharing that there, Ophir. What else we got here? A bunch of all sorts of VIX ETP stuff. Let's see. Scott Summer writing in saying he thought the settlement for this March here of 1776 was revolutionary. He called it a revolutionary VIX settlement for the serial March at 17. Oh, I see his joke. I just got it. I'm late to the party. 1776. That's hilarious. I was going to say that level doesn't seem that crazy to me, but I just got it. So there you go. That's what I get for looking at a million questions at once. The joke was lost. Very, very savvy there. All right, let's move on here. VXX, JelloFan writing, VXX 1 year, 50% out of the money puts. Okay, so that's 1 year out, 50% out of the money puts in VXX this guy wants. Plus VIX 3 month, 15% out of the money call verticals. All right, he's got a lot of different levels here. He wants them 5 or 10 handles wide. Well, that's a big difference. Is that the secret sauce? So let's say that again. This guy wants to look at 1 year out, 50% out of the money puts in VXX. So VXX is pushing 50 right now, so that puts us somewhere around the 25 handle on the, let's for sake of reference, let's say the Jan 25 put out there. So let's put us somewhere around that level. And then we also have, he wants a 3-month, 15% out of the money, excuse me, call vertical out here in VIX, 5 or 10 handles wide. So maybe 25, 30, maybe a little bit wide. If he wants to go 25, 35, maybe in VIX land. That's a very precise recipe he's got there. I can see the thought process. He wants the VIX calls to kick in for times like yesterday, maybe when VIX comes rallying home. But that's, we said this before, that's the challenge with this, because the long term, the VXX puts, that's the trade. But in the near term, those VIX calls, that's going to be challenging, because that's obviously the challenge, managing the table stakes while you're waiting for that erosion to kick in. I don't know. This is a specific one. I love our listeners. They get very specific with what they want, particularly on this show. They have very specific needs on this show. I don't know. I don't think I've asked this before. Are you a fan of the long-term VXX erosion play, aka like he's talking about the long-term 50% out of the money puts in VXX? And then B, corollary that JelloFan wants to know, if so, are you also a fan of perhaps quote-unquote hedging that with some 5 or 10 handle VIX call verticals?
First, the VXX erosion play I like in general. It's driven both by the term structure and also mean reversion of the VIX. So I think that's probably a decent play to put on now. I don't like hedging long puts with something else on the upside. The great thing about long puts is you can size them perfectly to know how much you're going to lose. So I would just buy those long puts. And then if there's sort of mark-to-market issues in the meantime, either ride them out or you've traded too big to start with.
Yeah, that is the challenge, obviously. That's kind of what I keep coming back to, this side of it, is the VIX call side, because that's it can work, but we saw for the better part of 2017, not so much. So if you were doing that every quarter, you're going to roll that 4 times. Now that's going to eat up a lot, if not all, of whatever you're making on these 1-year puts. I don't know, Mark, do you like that VIX call, shall we call it kicker, maybe rather than a hedge thing for VIX? We'll get Mark back here as we continue going with, we got a lot of questions here from you guys. Here's an interesting one. A lot of questions about SVXY. Like I mentioned to you the other day, you and our listeners still up in arms about SVXY. LNC wants to know, he says, SVXY calls suck now. I think he's referring to the fact that a lot of the vol got sucked out of them, literally. He goes on to say, what about selling the puts? Is there any juice in those, or have they been drained as well by the, I think he means big redo last week? This obviously came in a couple of weeks ago here. Maybe before we answer that, Ewan, just really quickly, what were your thoughts on the inverse vol space, the XIVs, the SVXYs? Did you trade those? And then, of course, looking back on it now, what are some of your thoughts on the way the space played out with, of course, XIV going the way of the dodo, and now SVXY becoming, shall we say, a pale shadow of its former self?
I never did. I always was short VXX or short UVXY. I don't want to claim I saw this coming. I certainly didn't. But I've been hurt in the past with index restructurings and so forth. So I was always aware that there was a go to zero sort of scenario. So I was always short. I was happy to pay the borrow fees and just stay short. So I never really got involved in the inverse space at all.
I think a lot of people were probably maybe wishing that they had done the same thing as well. Mr. Meatball, I think we've got your personal volatility sorted out there. What do you think about this? Instead of selling SVXY calls, instead of buying SVXY calls, even though they are cheaper now, but they also, as LNC says, they're cheaper for a reason, because he says they suck. What about selling the puts? Do you think there's any merit to that, even though the vol has pretty much been hit across the board?
Yeah, I mean, the vol is the vol. It's now appropriately priced for how much SVXY can lose and or make. And so The same amount, the put premium that you used to get is also cut in half. So I think, we're back at equilibrium. The edge is the edge. And, I found that there's some opportunity out there to find some things to trade around in SVXY if you have interest in it. And, I wouldn't say it's an entirely lost cause, just a mostly lost cause.
Just a mostly lost cause. Yeah. When I wish there was some magical world where the calls got crushed, but maybe not the puts, so it'd still be tempting to sell those. But it's not really how it works, and they all got hit. And so yeah, if you're selling the puts, you're still getting roughly half the vol you were getting before. So that's up to you whether that's worth it or not. But you're right. Maybe you might want to apply the same descriptive term you use to the calls, maybe to the puts out there as well. Oswald wants to know, are you guys part of the SVXY class action? Well, I've heard some rumors about some stuff. I've said before on the show, I would be surprised if I didn't see any litigation spring up around this. Just going off the vitriol I saw from you guys out there and talking to people in the space, everyone was very angry about the SVXY thing. The XIV thing, people it was in the prospectus. You could see it coming. It says it was destined to go to zero. So they kind of disclaimed it. You could argue how well they did at that, but at the very least, it wasn't an unforeseeable event. But the SVXY thing coming in just kind of ad hominem after hours and changing the investment objectives like that with no warning, people trading the options that day, people were there were people really getting on board the SVXY train. I'd see you guys writing into us, just going on about how great SVXY was, and we were trying to pump the brakes for you guys on that. And apparently, it was not enough to keep you guys away, because you guys were all in SVXY hard when this happened, particularly in the options. So I feel your pain. So I would be surprised if there aren't any now. Like I said, I've heard some rumors of some, but if there aren't any now, I'd be surprised if there aren't. Because any savvy securities litigator has to see that out there, and is probably fighting right now to put together a class on this, because a lot of people are angry. And when that happens, usually, and there's money being lost, usually there's lawsuits abound. This one's a little bit more esoteric, though. It's not like XIV, where it clearly and demonstrably went from around 100 to pretty much zero. Any jury can understand that. The SVXY argument, a little bit more in the weeds. Hey, you changed the investment objectives, now the vol got crushed on my calls, and so I've lost money in my premium. And maybe a harder sell to a jury or to a judge. So I still think there's a lot of interest in that case, but it might be interesting. I don't know if you guys, if you're even part of it, if you can comment. So maybe I'll just have your resounding silence we'll just leave it there in terms of if you want to comment on that or not. All right, we got more questions. We got a ton of them on the XVXY stuff, but we got to keep rolling into our final segment, aka the most embarrassing part of the show. I guess it's time to break out the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, listeners, and as we're finishing up the show here, it does seem like maybe some of the sell-off is mitigating somewhat out here. The Dow actually positive on the day now. S&P off less than it was at the start of the show, only off about 0.3%. The tech-heavy NASDAQ also off slightly less, about 0.75% now, as opposed to about a full percent when the show started. VIX cash actually coming in a little bit, down to about a little bit shy of the 23 handle when it was around 24 to start the show. So not quite as far away from my prediction of last week, but still pretty far. Last week, it was Andrew and I on the program. We were both wrestling around the 15 handle for our prognostication. I went a little higher on 15.15. Andrew actually stealing my initial, what I wanted to do initially, which was 14.75. Neither of those, obviously, in line today. Long term, I like those in the span of a week, or in this case, in the span of a few minutes, not so much. So both of us losing, shall we say, last week. So not our best week, but still, that's the fun of the crystal ball. A bunch of people pulled me aside at RMC to say they like the crystal ball the best, because it's just fun to hear people predicting VIX. And also sometimes making a hash of it, which is also fun. All that's a long way around to saying, Ewan, you're a guest, so you get pride of place this week, particularly because none of us here on the show won last week. So you get pride of place with the first guess. This is, of course, trying to predict where VIX will be at this time next week. Now, of course, it's a challenge because we have no show next week because the markets are closed. So maybe we'll say on the close of Thursday then instead, because it'd be hard to make it for this time next week. So let's say approximately a week from now, really Thursday close. Where do you think VIX cash will be, sir?
Okay, so with the normal caveats that this is not advice in any way.
Yeah.
And I'm very, very uncertain in my prediction this week because a lot of things are happening very quickly. Having said all that, I would say 19.5.
19.5. So you're feeling like still a little elevated, but not quite the shall we say trade war palooza that we're seeing right now out there in the land. And let's go here, Mr. Meatball. You weren't on last week. So you didn't have a chance to make a wildly inaccurate prediction. So I'll give you the chance now this week instead. What are you feeling for this time next week, or should I say really Thursday close next week?
I mean, the way things are going, we could be 19.5 today. But who knows, right? I think I said this yesterday, right before Trump was making his announcements. I said we were down 50. I said I'd be surprised. I would not be surprised if we were down 100. I would not be surprised if we were green on the day. I wouldn't be shocked if the VIX is 15. I wouldn't be shocked if it's 30. That being said, I'm going to lean with Ewan, but go a little lower. I'm going to say 18. Maybe even a little lower as we get a little end of quarter window dressing.
15. I would certainly have a smile on my face if it was on 15 next week. But yeah, so I'm sorry. What was your final prediction then?
I'm going to say 1776 in honor of our country.
In honor of our friend there with the revolutionary settlement there. 17. I was feeling 17 handle now too. So that's why I usually go first. I also put Ewan under me, so I should probably move that. There we go. Ewan, 19.5. All right. So yes, you're right. It is a challenging one, particularly because we're not guessing a full week this time. It's going into Thursday close because there's no game to be played on Friday. All that a long way around to saying I'm feeling downside too. A little bit more than Ewan, but I was feeling where the meatball was. But I'm going to have to go a little bit south of that. I mean, I could split the difference though too. Not really feeling 18. I'm going to be aggressive this week. I'm going to say 16. 1685, 16.85 out there. Even though I wanted to be a little bit higher, but that's what I get for being a nice host and letting everybody else go first. This is why I like to go first. But say la vie. There's a reason why I won last year, though. We'll just leave it at that. Of course, I think I hear the music coming, which means I do believe we have to get rolling here. There it is. Yes, there's the music. But before we go, one last time around the horn. By the way, listeners, if you're listening live, stay tuned. All this vol talk, if you like it, you want to get a little bit into the commodities, what's going on in commodities, what's going on in skew, implied volatility, open interest, all that fun stuff. Stay tuned. Come back in about a half an hour, actually 29 minutes for good old Twifo. We'll get into a lot more of that, metals, energy, indices, all that fun stuff. Spoiler alert, maybe a little bit of ags. You guys have been asking for that. A bunch of other fun stuff. Maybe some crypto. You never know what's going to make it on the old Twifo program. So if you're listening live, come back in a half an hour. If you're listening on the podcast, just stay tuned to your feed. You'll get it there if you're listening to the network feed. But before we go, let's go back around the horn. Let's start with our guest, Mr. Ewan. You've been up to a lot of stuff. You've dabbled in crypto. You dabbled in the education kind of software space. Now you're back in the vol fun space. So what can we expect from you guys coming in the coming months, sir?
What do you mean by expect from us? What do I expect from the market?
We're in
a bimodal range. VIX is going to be a little bit lower or a lot higher. I'm just going to continue to plug away at the fund. I imagine we'll be flat for the next 2 or 3 weeks. Hopefully getting short after that.
What I meant was, if you want to plug anything, maybe an appearance, a book, or where they can find out more about your fund, you can do that. If you want to prognosticate about the market, you can do that too.
Go to my blog, talton.blogspot.com. I give my general thoughts on the market in there.
All right.
Just lost Ewan right at the end there. The magic of technology. He said he was in the Faraday cage throughout most of the show, so I think that was eating into his signal. Check out his blog, Talton. That's ton.blogspot.com. Yeah, he's got some books out there and other good stuff. You can check out Ewan Sinclair, EUAN SINCLAIR, to check out more. While you're at it, give him a follow over there on the old Twitters at Sinclair Ewan. That's EUAN SINCLAIR Ewan. To give him a follow, maybe some good vol nuggets there for you guys to see as well. And speaking of vol nuggets, Mr. Meatball, you're always good for a few. What can we see coming down the pike from the pits and the vol fund?
You know what? We've talked about my vol fund a bunch. You can email me, Mark at Carbonline Capital, if you're a qualified investor. And, you can reach out to me, mark@optionpit.com, if you have trading questions. But also, have you read my new book, Trading Options for Edge by Mark Sebastian? If you haven't, you should. It's a good options book. I think you'll like it. I think you'll pull some good stuff out of it.
There you go. Trading Options for Edge. Check it out over there on the old Amazons or wherever you buy your favorite books. And I want to thank my cohorts here for joining me, Mark and Ewan, for a fun show here. Reminder, no vol views next Friday. I know, sad face. But the markets are closed. Nothing we can do. We can't conspire against the market gods. And on behalf of Mark and Ewan and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, subscribing, all the fun stuff that you do. If you're listening live, stay tuned. We're going to pump some goodness into the old live feed for you right now. Maybe my little chat with Tony Sleeb I had earlier this week about all things volatility, crypto, a lot of good stuff in there. Stay tuned for that. And we'll be back live in about 25 minutes with a little bit of TWIFO.
Volatility Views is brought to you by Cboe. Cboe is one of the world's largest exchange holding companies, and we're inspired every day to innovate some of the industry's most powerful products, technology, and solutions. We are the industry's leading force driving access to global markets. A better trading experience and powerful data and analytics to inform better strategies. We're committed to engineering new ways to help our customers realize their potential and navigate the marketplace of tomorrow, today. Visit Cboe.com. That's CBOE.com to learn more about our expanded offerings.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.